All right, Sunday, December 18, 2016. We have the dollar a little bit stronger this evening right now. Asia, Wellington is open for trade. Yes, things are trading a little under 118 on the yen. And keep an eye on that British pound New Zealand dollar. Like I said, it's coming off of it's been beat up, it's pound versus whatever kind of thing. Pretty good hammer on that quarterly chart. So, but I'm going to run through for my folks that follow forward markets here. As you can see, here's the Netherlands. Okay. I'm a quarter Dutch. I look at two. Look like the Quaker Oats guy. All right, so they had a high in 2000. This is all they could muster in 2007, and we're up to here. There is the deal of declining highs here. Now the deal is with the lower euro, we should be drinking, say, like things of, I think Heineken is still by themselves. I mentioned before, my applesauce came from Poland, my chocolate came from Switzerland, my ladyfingers came from Italy, my gnocchi comes from Italy, that kind of deal. So stronger dollar, we get more imports here. So a weaker euro will cause issues, inflation that way, things being brought into the country. They do look like they're holding it together here for now, but the deal for me is that they've had a series of lower highs on here. Basically the same thing, just draw trend lines underneath here, and of course the resistance is at the upper end here. Lower euro, better exports, that kind of thing, but they will be importing inflation that way. Some of the other indexes we go through, you can see that there's things have kind of rolled over for them. But basically, it's just a trend line underneath it for right now, for in the Netherlands there. Australia, the caution here is of course China. China buys from Australia. This pattern basically reminds me of oil. When oil hit its peak, unwound in 2009, chop. Australia's had, they've had a long period of boom in their real estate market. The Australian dollar is beginning to come off too. So their exports will be cheaper, but they'll import inflation. There's a website I went to about how much something costs. And a friend of mine was going to Australia from Canada, and the pack of cigarettes was 17 Australian dollars. Yes, another reason to give up smoking, right? So, but to me, a lot of this is choppy. They have to make it up in their commodity side. They also have, wheat. But mostly they're fighting problems with dealing with exporting coal and stuff, things for industry out of China. So to me, this pattern looks like the topping pattern of oil before it rolled over. You can see that had a nice run through the secular cycle of commodities. They rolled over and wound, and they're just kind of chopping their way up right now. But they're, like I said, their currency is going the other direction, so they will have import inflation issues. Belgium, just like the Netherlands, the previous high here in 2007, and then just a lot of choppy going on in here with the Brussels exchange. What kind of pattern do we have here? We have kind of a diamond formation here. So there you have to watch out for a breakout that fails to hold and a reversal on there. There basically, this was after the slide in 2007. This was a pause, and that's where it's at right now for Brussels. Same thing again, dealing with the currency. Brazil, this one should say short on here. Brazil, they're having issues. They're the whole developing type deal, developing emerging country type of deal, where their currency, the US dollar was strong, and that was pushing their market. You know, they're coming off of the Olympics and things of that nature. It seems like everybody who has the Olympics, things just don't work out afterwards. You know, Montreal in '76, and you know what happened with us in Russia and Moscow in '80 and LA in '84. I was there in '84, and the 405 just barren. I actually hit out in San Diego, but I was shocked. You know, one day it's bumper to bumper cars, and for the next 2 weeks, zero. I mean, just absolutely zero bodies. So a lot of folks in California took off. It was quite interesting. This 1988 Sarajevo, and guess what happened there? They had their issues. And then it just goes on, but it always seems like that whoever hosts the Olympics, there's always digestion problems afterwards. And for me, I'm leaning that Brazil is going to have a tough time here. The French, same thing, that basically looked like Amsterdam, same, you know, previous high. The deal here is that, you know, a lower currency does make their you can buy more, basically. You can, with, you know, stronger dollar, you come in and buy more. Shallow pullback on here, so that shows that there's bullishness underneath it here. Basically the same thing, just trend line underneath it, and you know, the resistance level, you know, they all just seem to be pausing up in here under previous high. Germany, okay. Things will get interesting. Germany, they export a lot of goods. So the benefit there is with the lower euro, they're able to export, but depending upon how things play out with American politics, they may run into problems too. You know, at some point, America will be shunned for their bad behavior, you know, but that's here nor there. But it starts off, you know, you end up with the tit for tat kind of thing. Basically, you know, they've taken out their previous highs. Good march forward. Like I said, they have the benefit of the stronger dollar, but they are going to they probably run into some issues here up at the previous highs. The dollar, if the dollar goes straight up from here, which I don't see it happening, you know, you're going to have some back and forth. If the dollar does go screaming higher from here, it would mean that interest rates are just taking off something fierce, and you end up with where you have inflation on German imports here. Items that they need for their industrial side. It's just it's kind of like a little bit of caution. It's, you know, it's kind of like 1997. We had the Asian contagion, and that it started with the Thai baht unwinding, long-term capital management, a hedge fund with 2 Nobel laureates in there. They didn't include the '87 crash in their model, and of course, they didn't last very long. And then it rolled into Russia, where they ended up defaulting. But at that time, oil was coming off of, I think it was around $12 or $15. So the thing is that they may look good here, but you end up with other problems other places. You know, they're a large exporter, right? So they're relying on the rest of the world to purchase their goods. So, you know, they may look healthy, but if other countries, kind of like if America gets the sniffles, the rest of the world gets a cold. Same thing here with Germany. Dow Jones World Index. So here we are, Mother Earth here. So we're coming up to the old highs with for all the indexes commingled together here. How I lean is that a lot of this with the dollar related and with interest rates is that a lot of these countries in that they're going to have to adjust. U.S. raises interest rates, then to be competitive, so do some of the other countries, and causes issues for developing nations as their costs go up. So we're basically working our way forward into a global recession is how I'm looking at it, so they can cool off prices again and then start the cycle over. I am looking for some sort of recession to start taking hold in late 2018. But basically for now, the trend is up in general for the overall for the world, but we've now punched a hole in the dollar, and we've lit the dollar on fire. It's taken off like a rocket. So there'll be issues. Plus, also we're dealing with trade issues and other sort of politics like that too. So things to watch out for in the back of your mind. And here we have the European Top 100. So they had a high in 2007, kind of stalled out here. A lot of the world indexes did top out in 2015. They came off. 2016, we did get a spike up in commodity prices here, which I look at that as just a bounce. And we're moving. We had a pretty good move through here through December. Okay, but like I said, if the exports are a deal, imports are not. So you're going to have some issue. It does filter across. They'll buy less Pepsi. They'll buy less Coke. They'll buy that kind of thing. Going forward here. Here we have a lot of this can be attributed to the lower pound. It makes attractive. It's a buy, right? You can buy more for less, kind of thing. The unfortunate side is on the flip side of the coin is when you repatriate your gains, it's less. Okay, so the way to actually make this work is if the pound goes higher, and I expect the pound to go higher over time going forward. It's been beat up pretty good. There's talk of 110. They talked about 120, and it's sliced through that on that Wednesday night, Thursday. And then in reverse, and we got up, we moved up, and now we're back to, that 123, 24 area. So I look at it as, I heard that it's at a 31-year low. So for me, that's the little bells and whistles go off that I'm interested. But here you have the same type of deal where here was the high, here was the high, and here was the high again. So it was a shallow pullback. The shallower the pullback, like in here, the more bullish they are. Okay, so like in here, shallow pullback, shallow pullback, shallow pullback. These are logged charts. So shallow pullback, that's how bullish they are. So it's the whole sentiment type deal here. Hong Kong, that should have said short up in here. That one's the most expensive real estate. La 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 la. Rhetoric out of POTUS, so to me, I'm looking at it as that that this was a high. This is the first reaction, then the bounce, and then going forward, same thing again, going with real estate and interest rates. Where where do you get your money from to buy the expensive property? So. Same type of deal. You can end up with, you're going to end up with trade wars, things of that nature. You know, things can get ugly in a hurry here with the whole tit for tat things. So, you know, it's a little bit on the caution side here. You know, I don't know why we're going down this path. But you know, people play their games, so I'm not sure why we would want to be doing things like that. But that's those are games that men play. All right, so here's Italy. Okay, Italy, like Portugal, I liked because it was at the other end, right? Okay, I suppose you could say that this is a large inverted head and shoulders. But the Italian vote coming in, this was on the long side here because it's just been so oversold. Yeah, they have issues with their banking and things of that nature. A lot when you start hearing about that, kind of like Deutsche Bank, right? You know, I posted that chart, you know, guess who's not in Deutsche Bank, and of course it goes from 10 to 17. All right, so it's the same type of deal here with Italy, just like with Greece, you know, the whole blood in the streets kind of thing. You know, they'll flush away their issues, and it's kind of like, you know, the hubris and the Dow. The hubris comes out of it, and new stuff comes into it. But you know, Italy has. You know, they do have trade in that, and with a stronger dollar, it means that there are more people that are going to go on vacation. But we've seen recently that the airlines rolled over, and the hotels and things of that nature beginning to roll over. Plus, we're at December, yeah. So it's an off thing. If it's going to pick up, it'll pick up in the summertime. Americans will go abroad. You know, tourism's a big thing. And that, but there was the whole, you know, sell the rumor, buy the news. You know, Italy took off. I did play, I think after post Brexit or something, I think it was what's it, EWI or something, played over the same. It's the same. You know, you look at something like this, and they're telling you, okay, bad news. It's like, well, you know, we've already moved from here to here. You know, the bad news didn't work. You know. So Italy, just like with Portugal. All right, so we have some American ones here, and this is a 2-hour. Okay, so basically the volume here now turns out to be that they're now listing from all exchanges into these bars. So the big volume spikes that we've seen here recently is basically because they're taking volume from all the exchanges. So it's kind of nice that they actually give you all the data now. So typically when you break out and move higher, you want to see it on volume because you have people that are committed to it. But at the end, then you get your frothiness. What do we have here? 1, 2, 3, 1, 2, 3. Okay, the futures and stuff are going to open up, I think in about, an hour. So, you know, we're gonna see how this pans out. Like I said, to me, this is kind of a goofy pattern here, because this really can't be like a third wave here, because it would have to be, you know, longer than the first wave. The third wave can't be short. So, you know, and like I said, not a lot of money rolled into Russell for the end of the year rally. The small caps are the ones that are beaten up. You know, they move out of the larger priced, you know, the winners, and roll in, you know, you find where it's cheap. And you know, America's service. So a stronger dollar, it just means that our software prices, it's, you know, we're not competing with cars and stuff, you know, where you have a finished good. You were talking services here, just accordingly. But that's the same thing we did when we had the strong dollar under Clinton. All the smaller issues ran up, and that's the kind of phase that we're in now. Those that have to move a lot of products will have issues with stronger dollar. But like I said, you know, it's one of these where basically with the high put call ratio, at best it's trading sideways. Okay, while that digests, I think a lot of people are kind of sitting it out to see about earnings here. Mexico, yeah, I put the short on there. Same thing, the Mexican peso I talked about in the futures video. Same thing. I think a lot of, you know, the currency works one way, now it goes the other way. You know, and all of a sudden the Mexican peso was stronger. So, you know, it really hasn't, it's, you know, it's still stuck where it's at. But, you know, I think a lot of these emerging type markets, you know, they're going to have issues. You know, South America, just like in 96, I believe. We're at 96 on here. Do we have it? Do we have it? Do we have it? I think it was 95, 96. Here we go. I believe they devalued or something, and then that actually caused havoc in America too, along the border with trade and things of that nature. So there have been times in the past, and you know, logged chart. So you know, you have your little moving average here as a cheat on a trend line, but I just think Mexico is going to keep coming back down. Euronext to go with the euro, same type of deal here. You know, basically your trend line underneath here, but the whole part of you know, the swing here is going to be currency related. NASDAQ, okay, NASDAQ 100. So here we have a bunch of highs. Okay. So basically, I will treat this as a inletted on pivot as a retest of the breakout. Okay, so you break out and then you retest. It has to hold. If it doesn't hold, then I'm going to treat this as a bull trap. Okay, you know, what do we have? What do we know? We have a frothy put call ratio. You know, they basically got in on the swing here, and they bought the calls. And so now it's, you know, it's one of those that if you're a floor trader, floor broker, and you sold those calls to people, you want it to go the other way. It's in your best interest to drive the NASDAQ lower or at best sideways. So we'll know here within an hour or so, see if we get any follow through here, okay, or if we just bounce. Remember, we're working on a holiday, the holidays are coming up. So the Nifty here with India. Okay, so India will treat this as basically a little bit of a double top, kind of a, didn't get as high here, came within a couple hundred points. Same type of deal with their currency, you know, the dollar gets stronger. Their interest rates were, you know, people were buying homes at double-digit interest rates. If the money is true, the money moves west, you know, moves from Britain to America to Japan to China, then the next growth would be in the India area. But they, as you can see, they've had a pretty good run. They've had some issues with the currency and stuff, so that begins to be a trust issue. You know, they're getting rid of one currency for another. What did the previous regime just printed it for themselves? You're getting that in Venezuela. So, you know, it's one of these things that it might not be happening in your hometown, but it's all affected. It's like bees, you know, all of a sudden bees are dead everywhere. Well, that's going to affect food, you know. Same type of deal. India, just like with China, if India has issues and China, same type of deal. It'll begin to affect us, you know. But the same thing is India's, moved pretty, they've had a pretty good run here. They could use some sort of this type of pullback here. What is that? 7,000 from 8,000. So it's at 12-15% down into this area. But we shall see if it pulls back further, drops even farther down. Nikkei. Okay, so we have the Nikkei with the strong dollar. They're good to go on their exports. The deal here is the yen is usually a carry trade, but the Nikkei has been going down since 1989 from 40,000. So it's only halfway back after multiple generations. This was a good snag here. Those are things I'm looking for too, is that you have something that's been weak for a while and the rest of the world falls apart. So how much more can this thing fall apart? And that was a good snag on there because you're looking for that here. My only concern, of course, is that at some point, right, Japan is going to, if it takes another generation, it takes another generation. But to get everything, fixed over there, there's a good sign here that it popped above the previous high here, and it has a pretty good run. But like I said before, their number one trading partners is China, and I'm not sure, how contagious things are going to be here, depending upon, the direction we go in the next 4 years here. But it affects everybody. It has a pretty good run. It has a good momentum. The only caveat, of course, is that it's run too far, and it's basically been led with the currency. I think 118.80 I was looking for. So basically, it's the euro or the yen is back to where it started this year. It's had a pretty good run here, and that's part of the carry trade, where you the high yield currency versus the low yield currency, and it just feeds on itself. Just like I mentioned, the 50-to-1 leverage in America. America's raising rates. What did Britain? I think they dropped theirs and then stand pat. But the same type of deal, this is what we're working on. We're working on taking Americans and having them go shopping for imported goods. Try to have America be the supermarket to the world, and consumer-wise, but like on the flip side of that coin, then our exports are an issue, and that's what we had during the 80s and 90s. We had a strong dollar. Dollar got to 164 under Reagan and 120 under Clinton, and we're at 103 now, and the next level would be 105. New Zealand, here's the opposite, where their currency's falling and so is their market. They've had a really good run off the bottom here. Okay. The thing here is that it's this was part of the carry trade here because they were good yielding currency on the way up into this area. Okay. So it was a New Zealand dollar. This is the unwind, and then they had a pretty good run here. What I'd like to see is if it can hold maybe a little bit lower here, because eventually their lower currency should help them out here. They'd much better. It's a pretty good run though, but we had what did we run? There was the top in metals, top in oil, and they kept on going. They mostly agricultural type stuff. McDonald's used to import meat from New Zealand. It was cheaper than getting it out of Nebraska, Oklahoma, Kansas, Texas, that kind of thing. That's how the dollar works. It's kind of like I'm in the store and my garlic's from China. I'm like, hold on, what? What about the Gilroy is a few hundred miles away? Why is my garlic coming from China? Well, that's the strong dollar deal. A lot more imports. The opposite of what POTUS says. A lot of issues if you do that. Okay, here we go. Portugal. This is a good reversal bar here. These are monthly charts. So Portugal I marked down as accumulation. So Portugal and Italy. You can see it's, the trend is down, whatever. We can say that this is a double bottom. Maybe we get a W off of here. I'll actually go and look to see what Portugal has. An FYI, during the Black Plague, Portugal, because of where they were located, they didn't feel the effects of the Black Plague, and they went exploring across the country. And Brazil speaks Portuguese, or across the planet. And that's how that worked out. Their little claim to fame for a couple hundred years. But that's this is a pretty decent pattern here. I don't know what's in Portugal. I would assume that there'd probably be a pretty good deal on opening industry over there. in that. Russia. Okay, so Russia. Follow me on this one now. Okay, so we have 97 and 98. Okay, so Russia, the Asian contagion, they got to 500, 569, and then fell to 38. That smells like 1929, right? So Russia defaulted on its debt. Okay, then they got it figured out. Also, oil prices were 8, 12, 15 bucks a barrel. Didn't work out on it. It had some digestion of what was it? Not Glasnost. Was that it? There you go, Kev. History 30 years ago for 20 bob. I can't remember what it was. Glasnost, I can't remember. It wasn't the Solidarity. I believe that was Poland, but you catch my drift. So they had some digestion problems there because they offloaded their satellite countries. And, they just let them run and do their own thing. Yeehaw! Until recently. All right. So then all of a sudden they got their debt situated. And then of course oil prices kick in and everything. La, 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 la. You get the run up. This is the unwind. So they went from 2,500 down to 500. Okay. This is some pretty swift and deep pullbacks here. Then they had a run up again. Okay. Here's the run up with the peak of, with precious metals, and then they failed to make a higher high here. And basically it's been chopping down. So they've, here's 2134. That's ironic. That was what the S&P high was. And they dropped to 5. So they lost 75%. So they're used to losing 75 to 90% multiple times. Okay, I'm not saying it's going to happen again, but here we have a swing, okay, into the cloud. So it's one of these things here. Will it continue higher? Well, we're obviously going to see how this pans out too. You got your double bottom going on here. I'm leaning that this is corrective in nature here. They still have state-run problems here in my eyes. It's not really free over there. They did one thing was when the Saudis said they were going to, squelch the spigot. They sold off. The state sold off, I think, a fifth, 19% or whatever of was it Rosneft? So when you see stuff like that, it's somewhat, you figure those in the know why, if oil's going to continue on, to 80 bucks a barrel or whatever, why sell some off? It's that kind of thing. Unless, of course, you sell it off and then nationalize it again like previous times here. So, games people play, but I'm leaning that this is just corrective in nature here for Russia. Here's our Russell. Okay, so the bodies moved into this one for the Santa Claus rally. Okay, they got an early start here. Okay, so they ran it up. All right, we saw the money flow in there. The bodies moved in here in the put call ratio. So to me, at best, it's sideways in the Russell. The large traders are net long here. So they want to press this. This is also the smaller stuff is what moves in this cycle, similar to 97, 98, 99. But remember, I'll find that chart that we've had some pretty good hefty pullbacks on that run to 2000 from 95. Small caps, basically the same thing again. S&P 600. This 2-hour charts. So this is they get the run up. Pause, a little bit of a pullback, another run up, but not as the angle of ascent is a lot of there's a lot of panic when you have this here. And a lot of this has to do is after the election. You have post-election, and then they digest it. This was the weakest index of the year. Was it down 20-30%, and now it's up, and that was done in a small period of time. But like I said, there are a lot of bodies in here. Well, like I said, what I'm going to watch for this week is if we can't hold up in here, we're going to have, we could end up with a month reversal, and you end up with a bull trap. You can see, the amount of volume on here. There's a lot of bodies just in this alone. Here was a long sideways pattern, and that was it. So they're here. So you go below it, you take out this here, 836. You have a lot of people who are not going to be happy, and so then they flush, and they're going to actually. If we trade below here, I don't think this is going to hold. We'll retest the breakout, but I think by then our narrative will change in the marketplace, because like here you can see on the S&P, they traded sideways here through here, right? So traded sideways, a lot of volume, broke below it. I pointed out the put call ratio, too many put buyers, the gap and go video. This is a little more constructive. This is a little more, the angle on here is a little bit a little sharp. And then you have here where I point out the put call ratio, where there's a lot of call buyers. They get spanked. We bounced back, and then we just kind of rolled over here a little bit. So the deal for me is if we lose, what is that, 48.22? If we lose this would be a stopping point here. But I don't think that would hold, that we'd actually come down even further. Now we're playing the 21s again. So you're going to leave a lot of people. You can see here a lot of people up in here. You can see the volume in a few amount of days that the people bought in on this one here because of the breakout. They bought the breakout. And of course, now you need new bodies to come in here. We do have a couple more weeks to go in the month, but like I said, we lose this, there's the possibility of we lose the whole monthly bar, and that's going to leave a serious undertone here for next year. China, same thing again here, 2007. We're buying a lot of their goods. The unwind in 09 here, they got a taste of speculation. The farmers weren't doing their farming, they were flipping stocks in the barn, and they kind of squashed that idea. And now I'm looking at this as kind of corrective in nature of this move here, but I think that China's going to come down, and besides causing issues locally, also international. There are a lot of consumers are just like in India. Yes, their GDP per capita is whatever, I think 1/10 of America, that kind of thing. But you're selling a lot of goods. And just like for those of us who are older, remember Pac Rim in Japan, and then that fell apart. The same thing here. We all talked about China. Remember that? China. Well, guess what? So, I have to, I try and put the best spin on it, but I think things are going to get real interesting here. Singapore, should have been a short on this one here. This one looks like a consolidation area before it breaks out lower. It too is, chop, came down. This is like a secondary bear area and then come down here. Is there a similar one on here? Not really there. But, breaks down, trades sideways, and then breaks lower. Same thing, comes down, digests, comes, and then just collapses here, Singapore. TSX, Toronto Stock Exchange, they have it with oil. Need to get rid of some of those lines. Oil broke out, but it all comes down to, Canada is our number one trading partner. they're having, you know, they're having their issues too with wanting to offshore goods, you know, send stuff down to Mexico and things of that nature. It could cause, you know, for those who have an income, the products are less, but you have to have the income thing. So they also have, you know, the price of wheat, you know, the price of canola, you know, the timber prices, if it comes down, things of that, they're commodity sensitive. So, you know, I'm going to have to look at this as possibly a double top, working on a double top here. You can see volumes declining as prices are going higher. Less committed people want to be in there. Here's the Wilshire. This is the total market for the United States. Okay, this is basically the whole kit and caboodle. Okay, so I look at this to see how the whole market is doing. Same thing again here. You know, this could I keep leaning that this could be the last hurrah here. You know, but it comes to be mechanical. If it pops up, then you're going to have people who are going to add to it. Who's adding? You know, it's kind of like the S&P. It's a big chunk of the market is just not there, and we're going to see about earnings. And that's that.